Welcome back to lesson number 7. And here we are directed to read chapters 19, 20, and 21 of the textbook, which is found on pages 106 and 107. We will begin with chapter 19, Confidential Client Information. As we move along in our ethics course, I hope you find most of these conclusions and directions to be obvious. And occasionally they're surprising, but generally the right thing to do is a fairly obvious thing. Let's take a look at this one. Rule 301 simply states that an agent is not to disclose confidential client information without the specific consent of the client. In this context, the word specific means in writing. This should be fairly obvious. Confidential information. You've been entrusted as an agent, keep it confidential, not to be shared, unless you have written permission to do so, and it should be very specific with whom you can and cannot share the information. There are some exceptions. If the CPA is subject to a peer review or a disciplinary hearing, then the information may be supplied as a part of that disciplinary process or peer review process. Also, confidential information can be ordered by a judge through the process of legal subpoena. Subpoena, by the way, means under penalty. Subpoena is essentially a request for action or cooperation or information from a judge, a duly appointed judge, with penalties. In other words, if you don't cooperate, there is a consequence. Hence the word subpoena, under penalty. If the CPA firm is part of a sale or a merger or a purchase by another firm, this too could constitute an exception to the confidentiality issue. But again, we want to be very, very careful in what we are disclosing as a part of such processes, and that it is absolutely necessary. The information also, when it is shared, must always be subject to an agreement in writing to hold such information confidential, and the third party sharing the information has to specifically agree to such condition. Okay, chapter 20 next. Rule 501 presents acts discreditable, very tough word, discreditable to the profession. That means things that bring shame or disrespect to the profession because the practitioners are not professional and not ethical. We think of many groups of people in such fashion: used car salesmen, politicians, lawyers are professions that have a very low esteem because so many of their practitioners are not ethically oriented. The 4 exceptions are 4 listings of exceptions to this rule, to this discussion. Number 1, records belonging to the client should always be returned when requested. Kind of an obvious one there. Number 2, records may be withheld only if the engagement is not complete yet, or payment for service has not been made, in which case you hold the records and say these are being held hostage until such time as you pay us. Number 3, working papers are the property of the auditor and the auditing firm, unless the law states otherwise for very specific reasons. Number 4, finally, the CPA code generally requires the return of all loan documents. By the way, I hope you don't belong to the loyal brotherhood of book borrowers. People that borrow a book say, I'll bring it back to you, I'll give it back to you, and never do. All right, Rule 502, Chapter 21. Our final topic. Here we cover advertising and other forms of solicitation, meaning sales activity. Every company would like to increase its client base, like to get more out of each client. There is an ethical and an unethical way of pursuing that. The rule quite simply states false, misleading, or deceptive advertising is prohibited. Now, interestingly, false, misleading, or deceptive advertising is not necessarily illegal, but it is prohibited ethically. The text amplifies this statement very, very briefly. We can probably do better. The discussion questions next center around the licensing and business form that the CPA or CPA agency firm will take. The question of how to structure, for instance, corporation or partnership, a combined accounting law firm is introduced as well. When you have a firm providing services, both legal advice and auditing advice, there are some inherent potential conflicts of interest there that have to be resolved up front. These need to be discussed. Although the text doesn't deal directly with the issues brought up in the discussion questions, they are easily enough researched. And so we have 4: discuss license requirements for the firm, discuss joint practice of law and accounting, discuss ethics ruling on the form of organization and name, and number 4, discuss responsibility of the non-CPA partner. Presumably we're talking about the lawyer partner if it is a combined services firm being discussed. Well, that's it. We hope this is very helpful to you and look forward to our last class coming up shortly, one more week. Bye-bye.